Essentially what this would almost make a lot of sense, right? Imagine all those people that are buying gold up here. If they flush down gold to, let's say, a pierce of 2,500, a lot of those people will get scared, exit their positions, and then the bull move can start up again. So I'm kind of looking for a pullback off this 2660 level back to 2,500. And then that next leg towards 3,000 should be. The silver market per market cap is not huge, so it can be manipulated. There can be other factors involved there as well. You will see, like, once it breaks key levels, whether that's $32.50, you will see bigger short squeezes in that market where people start to chase it. And because it's a smaller market cap market, the moves will be much, much bigger. And we've seen that in the past as well when silver's gone on crazy runs.
In a significant milestone for the precious metals market, gold futures have surged to an unprecedented high, approaching the critical threshold of $2,700 per ounce. This remarkable achievement sets a new record for gold and positions it as the most valuable precious metal in history, outpacing silver, platinum, and palladium. While this upward momentum underscores gold's status as a safe haven asset, some analysts, including famous strategist Gareth Soloway, project a potential short-term correction to approximately $2,500 before a subsequent rally that could elevate prices toward $3,000. While analyzing historical trends, Gareth Soloway examines key bull market cycles, focusing on the notable gold price peaks of 1980 and 2011. In 1980, soaring inflation in the US, largely fueled by the oil crises of 1973 and 1979, prompted many investors to turn to gold as a protective measure against rising costs. This era was marked by economic instability and geopolitical tensions, which contributed to gold reaching a then unprecedented high of $850 per ounce. Fast forward to 2011, when gold prices soared to over $1,900 per ounce. This surge was driven by widespread fears regarding the global financial system after the 2008 financial crisis. In response, central banks implemented extensive quantitative easing and cut interest rates, leading investors to seek gold as a hedge against inflation and currency devaluation. According to Soloway's analysis, gold typically experiences a brief retracement after such rapid price increases before resuming its upward trend. This recent rise in gold prices and ongoing global economic uncertainty has spurred significant investment in the metal. However, some analysts argue that a pullback may be necessary to eliminate short-term traders, setting the stage for a more substantial rally. By examining percentage gains from past bull markets, Soloway speculates that gold could reach as high as $8,850. While this prediction may seem ambitious, many believe gold will continue to be appreciated as a trusted safe haven during economic turmoil. We will present clips from Gareth Soloway's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you.
So if you're looking mid to long term, there's a massive amount of upside still in gold. And I know, I think the last time we talked, it was at 2,100. So we've already come quite a bit higher than that. But one of the things I do want to mention, so there's a difference in timeframes, right? If you're looking mid to long term, I remain very, very bullish. We just hit, though, my next target price, which was 2,600. And I want to show you how I came up with that price. So what I do is I flip to the logarithmic chart on TradingView here. And what I did was I said, okay, well, what if we zoom out and we go back to our previous bull market cycles? And so if we do that, we see that in 1980, we had this high. We connected to the high from 2011, the bull market high there. But look at what we just tagged here, that same trend line. So based on technical analysis, this tells me in the very short term, you might get some sort of retrace in gold, which almost makes a lot of sense because in all fairness, I think you mentioned this before we started recording as well, is that there's so much hype out there. So many people are jumping on the bandwagon of gold. And one of the things I've learned in trading is that when everyone jumps on, it usually has to shake those weak hands out. The hardcore people like us, we're going to be riding this even after a pullback. But there's a lot of weaker hands that think, oh, this is easy money. They need to get whipped out first. So in the very short term, I'm looking for a pullback to 2,500. and then the next leg to 3,000 should begin at that point in time. There's a tendency in charting where once you break out from these levels, you get that big push up like we've seen, but at some point it comes back in to retest it. I call it the scene of the crime retrace. Once it does that, then it can make its next move to the upside. So essentially what this would almost make a lot of sense, right? Imagine all those people that are buying gold up here, if they flush down gold to, let's say, a pierce of 2,500, if it were to just go a fraction below 2,500, a lot of those people will get scared, exit their positions, and then the bull move can start up again. So I'm kind of looking for a pullback off this 2,660 level back to 2,500, and then that next leg towards 3,000 should begin. But I think you're right on this when you talked about the dollar, right? The dollar ultimately, to me, looks like it's going lower, which means your mid to long-term view of gold it's going to go higher. So there's a couple. So we know that the 3,000 even number is probably the next big number. It's an even number. These huge even numbers get a lot of notoriety. Price likes to get drawn to them. I will say that there is a kind of a crazy technique that I was doing to try to figure out where the ultimate upside on gold would be. And I'll show you guys this real quick. And this is, listen, the accuracy of this to a dollar, not even close, but it's still very, very fascinating. So if we take a look at the 1970s run on gold, what do we see? Well, we saw from the low here in 76 to the high here, it was about, what was that? About 800% move. And then if we take the low from the 2001 lows to the highs of 2011, it's about a 650% move. Now, if you average those two out, it's about a 725% move. So if we talk about this was a bull market, this was a bull market, if we just replicate that type of move, and I got to really go and drag this out, from the lows in 2016, you're talking about a 700%, let's just say 700% move on gold, and that would bring us all the way up to about 8,500. So again, listen, that's for us that are bulls, that's like a dream, right? I mean, if we all dream about it, maybe it'll happen. I'm just using that one simple tool of saying what's the average run in every bull market since 1970s, and that would give us an $8,500 price target. Now, if you go back to saying, well, what causes us to go there? Well, we have a lot of factors, right? You have global instability that's just getting worse. You have the U.S. national debt, which is just keep going up, and all these central banks just continuing to lower rates and print money. So there's a lot of reasons why it could do that. But again, that's kind of the pipe dream. If it could get there, that would be awesome.
The silver market is poised for a significant breakout, influenced by the Federal Reserve's recent interest rate decisions and an anticipated increase in industrial demand. Gareth Soloway observes an intriguing shift in market dynamics. Silver functions more like an industrial metal, similar to copper, rather than maintaining its traditional role as a precious metal. This trend is particularly evident in the recent price surges of copper and silver, driven by substantial stimulus measures introduced by China to revitalize its economy. While Soloway recognizes silver's status as a precious metal, he points out that its industrial applications largely dictate its price movements. This reflects a growing trend among investors, who increasingly focus on silver's utility in manufacturing as global economic activity ramps up. However, Soloway remains optimistic about silver's potential future trajectory. He foresees a pivotal moment when silver will break free from its industrial metal behavior and reclaim its rightful place as a highly sought-after precious metal. If silver can push past key resistance levels, especially the critical $32.50 mark, it could spark powerful short squeezes, sending prices soaring. Such a leap could see silver reach between $48 and $50, thrusting it into uncharted territory and further solidifying its appeal as a top investment choice.
At this stage, it's now gold in a league of its own, and silver is behaving much more like copper as an industrial metal. And no better example of this than just yesterday. This is the chart of copper. Look at this massive green candle right here. And then if we flip over to silver, we can see right here, look at this big green candle on silver yesterday as well. And again, think about what caused this. Why did copper rally? Well, it was because the Chinese introduced massive stimulus measures. And that, again, is an industrial factor, a strengthening of the economy that should, in theory, boost demand for industrial metals. And therefore, again, copper rallied, and now we see silver rally as well. But I do think that at some point, silver becomes the next one to go. And at that point, I do think you see a lot of upside in silver. The question is, at what point? Do we have to get into a recession and then there's still demand for silver and people start seeing that again, where it's like, okay, well, people still want to have silver in their homes as a safety asset versus just the industrial side. But I do think that, again, like you said, as of now, people have to just accept that until it changes, this is more of an industrial metal and it's behaving just like that. And I also think it's important to remember that the silver market per market cap is not huge. So it can be manipulated. There can be other factors involved there as well. But then likely you will see, like, once it breaks key levels, whether that's $32.50, you will see bigger short squeezes in that market where people start to chase it. And because it's a smaller market cap market, the moves will be much, much bigger. And we've seen that in the past as well when silver's gone on crazy runs. I mean, I think that the main price target here you have to start looking at. So, I mean, just in the short term, 32.50, right? If we break through 32.50, there's this pivot from 2012, which is around 35. That would be your next level. And then following that around 37 and change. But for me, at least, when I zoom out, the obvious one here is this level up here. You have your 1980 high connected right across here, and then this high right here from, I think that was 2011. So, at some point, I think even maybe when we break 35, you might see one of those squeezes to the upside that take us up to this $48 to $50 level. Once we get there, that's the trickier thing, because it would be in unexposed territory if it gets above $50, where it's never been before. So then we would have to go into kind of these gold analysis points where it's at all-time highs, and we'd have to evaluate it there. I do trade silver. I've been a little bit more cautious than on silver because of its industrial side, like you've been mentioning. So it's not as pure play as, hey, just go long gold, because with the printing of money, et cetera, it's going to go up. You have to be a little bit more nimble, because if we did get an economic report here in the US that was very, very weak, silver would dump out while gold would likely hold up. And so I do trade it, but I'm just a little bit more careful about my entries and exits.
Regardless of the potential for a pullback, there are no signs of it, suggesting that the current rally in the gold market may continue. A decisive move above today's high of $2,686 would signal a continuation of the bullish trend in gold. If this momentum continues, gold could advance to the next level at $2,724, completing a long-term pattern originating from the February swing low. What do you think about Soloway's bold prediction on gold and silver prices? Let us know in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.